Hi traders, welcome to another episode on the trades we missed last week. So without further ado, let's move on to our first trade for last week Monday. That Monday morning we had a bullish trade here, and you can see how price created a fair value gap here. As price created this fair value gap, moving on, it comes back to tap into that fair value gap here and pushes to the upside. Now, after pushing to the upside, giving us a break of market structure here, you can see that it created a fair value gap here. This fair value gap indicates that once it comes back here, it wants to go bullish. So we would put our entry here at this fair value gap, giving us a reason to enter that trade. Now we'll put our long position here, and we have our stop loss at this low that created for us that fair value gap, and our take profits would be at the previous swing high here. You can as well put it here, this previous high, but this is a much larger risk to reward ratio, giving us a 4.29 risk to reward. Moving on, we have our trade number 2 right around the corner here. As price reaches our TP for the first trade, along the line it created this second trade here. Now we have a fair value gap here. See this fair value gap right here. Price comes back to tap into this fair value gap and goes all the way up, and prior to going up, it created a fair value gap and a break of market structure. As you can see, this is a break of market structure, and in that aspect it also created a fair value gap here for our entry. And as it comes back, this is where we'll put our entry. So our stop loss will be right at this previous low here. So let's push forward, long position here, and our stop loss at this previous low. You can as well put it here for safety reasons, and we have our take profits at the previous swing high here. Now we have our TP there. You can see how price rallies to hit our TP. Boom, we have it here. So this trade would have given us a 3.68 risk to reward ratio for our second trade, and that was also a bullish trade. Moving on our trade number 3. Where is our trade number 3? Okay, so our trade number 3 is right here. As the price goes up, we have our trade number 3 here. You can see this fair value gap here, this fair value gap right here. Price comes down to tap into this fair value gap before rallying to the upside. We have a fair value gap here. This would indicate our entry. So our entry will be like so, and this fair value gap here. Our stop loss right below this low that tapped into that previous fair value gap here. So this would be our entry here at this second fair value gap. So let me use demonstration for you, and we have our long position here. So at that fair value gap is where we put our entry. So our stop loss right below that low, and our take profits would be at this same high right here, giving us a 2.5 risk to reward ratio. So, and that was our third trade. Next is our trade number 4, and our trade number 4 happened to also be a bullish trade. Now we have a fair value gap right here, and this indicates a bullish zone here. So this fair value gap is where price comes back to tap into to give us a new fair value gap and a break of market structure. As you can see here, after price taps into this spot, we have a fair value gap here, this fair value gap, this one right here, and we have a break of market structure here, break of the previous high. And the next one is our entry here, which is that fair value gap that I indicated to you. So this would be our stop loss. The low that created this fair value gap would be our stop loss, and this is how we enter the trade. So long position here, put our entry here, and our stop loss right below that low. The next thing is our take profits, and this is our take profit right here. This would be our take profits here, and this is giving us a 3.55 risk to reward ratio. The next one is our trade number 5. So let's search for our trade number 5. So our trade number 5 is here, and we can cite a fair value gap. So let's say we have just this fair value gap at first. What we need to look for is to wait for price to tap into this fair value gap. So immediately price taps into this fair value gap right here, you can see this candle here comes back to tap into this fair value gap, then also created for us a break of market structure. You can see this previous high was taken, and also price closed above it. So we have this like so, and you can see a fair value gap here. This fair value gap is where we'll place our entry. We can as well place it at this order block. So once price taps deep into this order block, we are good for a much higher risk to reward ratio, just like so. We have this. If we had used the order block right here, so as price comes back to tap into this order block, this is definitely giving us a higher risk to reward ratio than using the start of this fair value gap. Sometimes price might not actually come so deep to touch into this order block, but that's okay. We can also look for other trades and wait it out. So we have our stop loss right below this low right here. This candle, the order block right here, is where we put our whole risk, and we use this previous high as our take profits, giving us a 2.36 risk to reward ratio. We can as well check for highs like this for a much higher risk to reward ratio. We have this like so, and we have our take profits here for a much higher risk to reward ratio, giving us a 5.64 risk to reward. And we can see, boom, price hits our TP, and that was our trade number 5, also a bullish trade. Then moving on to our trade number 6, it happened to be that we had a bullish trade. So this was a fair value gap here, and also a demand area. So this demand zone, price comes back to tap into it, giving a break of market structure here. So we search for a fair value gap that is needed right here for our entry. So this is where we'll put our entry at this fair value gap, or price can come so deep to tap into this order block right here. So you can see how price comes to tap into this order block and move to the upside. So let's put our long position right here. Price taps here, and this low right here would be our stop loss. this low right here would be our stop loss. So that's our control, our risk. And the next is our take profit. Now our take profit can be this, giving us a 2.5 risk to reward ratio, or can be this high right here, giving us a higher risk to reward. It can give us a much higher risk to reward ratio, giving us a 3.68 risk to reward ratio. You can see how price tried to rally to the upside, but comes back to tap into this fair value gap, giving a re-entry. So if you had missed this entry, you can as well use this entry. So let's see if this entry is okay. So this is how we would have taken this other trade. So we use this previous low right here for our stop loss, and this fair value gap right here. As you can see, there's a fair value gap here. This is where we put our entry. So you can see our price also came so deep to tap into this order block right here. So if you had used this order block, let me show you this order block here. If you had used this order block right here, it would have given you a much higher risk to reward ratio. So from here to that same high, giving us a 6.91 risk to reward ratio for our number 6 re-entry trade. So next would be our trade number 7. Our trade number 7 happened to be a bearish trade. So now we have a fair value gap here. This is a supply area. Now we highlight it down. So as price comes to tap into this supply area, we anticipate a clear fair value gap. Now we have it. This is our clear fair value gap here. This one here. We have a fair value gap here. Next is our break of market structure. We have a break of this previous low, and we'll wait for price to come back to that fair value gap so we can tap our sell. So now we can highlight it just like so, and as price reaches for that fair value gap, we are ready to sell. So now see how price taps into that fair value gap here, and this is so a short position right here. And our stop loss is right above that high that tap into that first fair value gap, and this is where our entry would be. The next would be our TP, which is our take profit, and as you can see, this is where we'd put our take profit. Any high that is suitable for you. You can also put your take profit right before a major fair value gap, just like so. This is a fair value gap down here. You can also put your entry. Sorry, you can also put your TP before this fair value gap here. So using this previous low, you can see a 3.0 risk to reward ratio. You can see it here. But using this previous low before that fair value gap here, you can see a 4.43 risk to reward ratio for our bearish trade, which was trade number 7. Now moving on to our trade number 8, we have a tap into a fair value gap here. First, you have a tap into this fair value gap here. We can as well enter from this spot, but we are using this much more clearer fair value gap here. You can see just like so, we have a fair value gap here, and price comes to tap into this fair value gap area here, and would anticipate for a much clearer break of market structure and a newly formed fair value gap. Now we have a previous low right here and a fair value gap here. So this was our break of market structure here. You can see our price broke and closed above this previous high here, and we have a tap into that order block. You can see that tap and this push from this order block and this fair value gap. So using the order block for our entry, we have used our long position here. This would be our entry, tap into that order block, and here would be our stop loss. So here will be our stop loss at this previous low here. The next in line would be our TP. So our TP would be this previous high right here. So this is a TP giving us a 2.33 risk to reward ratio. You can see. We can also see a re-entry here. You can see our price crossed above this previous high and also created for us an entry here using this fair value gap here. You can see this re-entry here. Price comes back to tap into it because it has once tapped into a fair value gap here. So the next thing is price coming to your TP, giving us a 1.69 risk to reward ratio. And moving forward, you can see our price rallied all the way to even this previous high here. So you can see how the price rallied to give us a bullish trade and a higher risk to reward ratio right from here to this spot right here, giving us a 5.46 risk to reward ratio, as you can see here. So the next one is our trade number 9. You see that this fair value gap is being tapped into here at this spot here. Now we have a fair value gap here and tap into this fair value gap right here. You can see this is a break of market structure. If you like it or not, this is a break of market structure actually. And you see how price used wick, which I really don't recommend. That's after price crossing a previous high or a previous low with a wick, it is not really advisable to use it as your reason for your whole setup. So now we have that tap into this fair value gap here, and you see the cross above this previous high, and the next thing is a tap into this order block. So this is how we put our tap into the order block. Long position right here, and our stop loss will be right below this low right here. Our take profit would be at this previous high here, giving us a 2.7 risk to reward ratio, or better still, you can use this for a more carefree trade. So this is a 2.23 risk to reward ratio, and you see how price rallied to the upside. So that was our trade number 9. And moving on, we have our trade number 10 at this spot. You see this fair value gap here. Price has been hitting a couple of FVGs here, and you can see how price taps into this fair value gap here, trying to rally to the upside, but giving you a retracement here. So now we have a tap into this fair value gap here. So this fair value gap would give us a reason to enter this trade. Now we have a long position right here. Tap into this fair value gap here, and for our number 10 trade, this will be our stop loss at this previous low here. And the next one is our TP. So our TP will be all the way to this previous high here. So this was a previous high on our left side. You see how price gave us a 3.71 risk to reward ratio. So that was our trade number 10. So moving on to our trade number 11. Alright, so we have our trade number 11 here, which happens to be our last but not the least trade. So this was a supply area. As you can see, this is a fair value gap here, and price taps into this fair value gap a couple of times, tried to bounce past it, but it could not, and created for us a break of market structure. There was no break of market structure at this spot here, so that was why we could not actually see any trade here. So now we have a break of market structure clearly defined at this spot here. So that means price was ready to go bearish. So now we can also see a fair value gap here. This would give us our entry signal for our short position here, and our stop loss would be right above this previous high that tapped into that fair value gap. So this was a bearish trade. So you can see this fair value gap here. This fair value gap will indicate that we can stop here for our take profit. So this is giving us a 3.31 risk to reward ratio, and you see how price taps into this previous low here. So if you had used this previous low, it would have given you a 5.27 risk to reward ratio. You see how price reaches for the TP at this spot here, just like so. So that was the last but not the least trade for last week. So traders, let's meet on our next episode on the trades we missed last week, and let's backtest together. Meet you on the next episode. Peace.